We're joined now live by Paul Hickin, who's a director at S&P Global Commodity Insights. Paul, thanks so much for taking the time. How are you reading this latest data point? Obviously, I guess to a certain extent, it was expected to cool off because of the cooling off of gasoline prices. But how does this build into the entire thinking of how the Fed will react?
I think this has been brewing for some time. We're seeing demand destruction has been the big factor in commodity markets. The S&P GSCI, key commodity index, rose by about 50% up until June, where it peaked. And then it came off almost 20%. And that's been a trend across the commodity spectrum. If you look at steel prices, they've been down significantly since March. And oil, the dated Brent benchmark has been down as well, has come down significantly. And that's been a trend across commodities as well, with agriculture as well. And that is a key factor, is demand destruction. The fears of inflation, the fears of interest rates are taking the sting out of the commodity inflation, and that inflation that's feeding in to the wider inflation at consumer countries, which we've been seeing, such as the US, such as India. And this is the factor. And as we see it come off, I think the risk of talking about how much it will feed into the Fed thinking, we are still in an inflationary situation here. It's trying to get on top of still very high, elevated inflation levels. And that is still a massive concern. And we're not out of the woods. When you think about what's happening in the energy space with Russia, spare capacity that you see at OPEC Plus, and you see what's happened with the Russia gas prices, with storage levels being topped up in EU and across Europe. But at the same time, if we have a cold winter, the fight for LNG across Asia and Europe will be huge, and stocks will get depleted again. So we're not out of the woods at all, and that should be factored into these inflation concerns.
Now, the one thing that I think a lot of people still have a question mark about, Paul, is what contributors are currently playing out with regard to the inflation print, right? How much of this is supply side and issues in terms of bottlenecks and supply chain issues, and how much is demand led? Because on the one hand, you have US jobs data, which continues to be reasonably strong in the context of what we're seeing. We're likely to see a continued resilience if the policymakers are to be believed. And so on that front, the Fed has its hands tied. But how much of what is playing out on the supply side do you think can we predict in the near term? Crude oil prices, for example, having cooled off to $95 for Brent crude.
Yes, you're right. It's supply side driven. This we've seen it back from the reflation trade out of COVID. If you look at the bigger picture, this was a huge 14 trillion of dollars of worth of reflation trade of fiscal spending to get us out of the COVID difficulties, investment back, kickstart at demand recovery. We've seen it back in the wider commodity space. It's been rising since sort of mid 2000s. So the commodity index, and that has fed into inflation. And what's the key thing about inflation in a lot of commodities and a lot of the industry is that the energy inputs that go into these things continue to have a knock-on effect, where we use high prices for in industry, for diesel and for gasoline in cars. It has a huge knock-on effect. And when you talk about going forward in terms of what the risk factors are, well, like I was saying, there's still a huge concerns about oil and gas trade off their own balances to some degree. Yes, we are seeing demand destruction, and we are seeing the prices be capped as the market prices in those fears around higher interest rates, around a weakening demand outlook. But at the same time, the supply side on energies is still very tight. The diesel is still a tight market. OPEC has still got very thin, historically low spare capacity. We potentially have risks like the US hurricane season. If that kicks off in late August, early September, some key wild cards. And then you've got Russia and India, for example, being big buyers of Russian oil. But if that was to drop off, you also have to wonder on that side as well, what will be the implications. So there's a lot of things to consider, and that's feeding into this tight, finely balanced situation between supply side pressures and a weakening demand outlook.
For painting that picture for us, and thanks so much for taking the time.